Shri Gurubhyo Namaha. Hello everyone, I am Vivek Naik, Commerce Lecturer, SDM College, Honavar. Before I start my lecture on the subject corporate accounting, let me thank the Almighty, the management and all my teachers. Because of whose blessings, today I am at this level. Once again, I thank all of them. So let us start our discussion. I take this as lecture 1, Introduction of Corporate Accounting. So after this introduction of the concept of corporate accounting, later we take the other concepts which are there in this particular subject. So for time being, we try to understand what is the concept of corporate accounting. So just I split these two terms, corporate and accounting. So you can find now here, one is corporate and one is accounting. Now what is this corporate? So in simple we say that corporate is nothing but companies. So we have a number of companies in India. For example, if I take Infosys company, Wipro company, or any number of companies. It may be domestic companies or multinational companies or international companies. So altogether we call it as corporate sectors or companies. Or to add to this, I can say that company is an artificial person created by the law, having a separate legal entity with perpetual succession and a common seal. So altogether we find the activities in corporates or in companies. It may be manufacturing companies or service rendering companies. At the same time we have one more term, accounting. So what is this accounting? So later we club these two, corporate accounting, but we try to understand what is this accounting. So we have one beautiful meaning regarding accounting. So the expertise say that accounting is an art as well as science of. Accounting is an art as well as a science of recording, classifying, summarizing. I repeat, accounting is an art as well as science of recording, classifying, summarizing the transactions which are of financial in nature and interpreting the results thereof. So that means what? Accounting is an art as well as science of recording. So what is to be recorded? Accounting is nothing but classifying what is to be classified. Accounting is nothing but summarizing what is to be summarized. And finally, accounting is nothing but interpreting the results. So what is to be interpreted? So one more thing we say that accounting is the language of the business. Accounting is the language of the business. So whatever activities undertaken by the business organizations, that is to be interpreted. So orally we cannot say that our business is like this, our business is like that. So nobody is going to believe. So we need some written communication. So that written communication helps the users of accounting to understand the nature of the business and they can take the decisions. So here one is corporate, that is companies, one is accounting. So altogether we say corporate accounting. Now here, recording, what is to be recorded? Company is there. Whenever company starts its business, it incurs the transactions. All those transactions are to be recorded. One more thing I focus here only. Transactions means dealings between the two parties which are measured in terms of money or equivalent to money. Because we have a beautiful concept called as money measurement concept. We are not there in the era of barter system where goods were exchanged for goods only. There was no common measurement of the transactions, but now we have common measurement of the transactions, that is money. So what is to be recorded? The transactions incurred by the companies to be recorded, the transactions incurred by the company to be classified, the transactions incurred by the companies to be classified, then transactions incurred by the company to be summarized, finally giving the results of the company. So when all these things are put together, we call it as corporate accounting. So whenever company incurs the transactions, I repeat, the transactions which are measured in terms of money or money's worth, that is to be recorded, that is to be classified, that is to be summarized, finally the result of the company is to be interpreted. Again, to add this, we have universally accepted accounting cycle, that is business transaction, from business transaction to journal, from journal to ledger, from ledger to trial balance, finally final accounts. So this is something universally accepted accounting cycle. So whenever we incur business transaction, dealings between the two parties, that is to be recorded in the books of journal. Accounting tells about recording the transactions. So where the transactions are to be recorded, transactions are to be recorded in the books of journal. Then we have classification of accounts, how that is to be classified. We classify the transactions. So transaction, dealings between the two parties. So normally we know that one account is to be debited, other account is to be credited because of the two different parties who are involved in the transaction. So that is to be classified. So we record in the ledger. Then we give the summary of the transactions. That is the nature of the transactions, whether cash transaction or credit transaction or any purchases transactions, sales transactions, purchase return transactions or sales return transactions. So whatever may be the type of transactions, we record it in the books of journal. Then from journal to, we classify, we record in the ledger. From there to trial balance, finally we record in the final accounts. So keeping in mind this universally accepted accounting cycle and the accounting concept, we account for the company's transactions. So this is the base of corporate accounting, the concept of corporate accounting. Now here, in the initial stage, what are the transactions incurred by the company? So let me take the concept so that we can easily understand this corporate accounting. Let me take issue of shares and allotment of shares. So issue of shares and allotment of shares. So what is this issue of shares? So company where we find number of members commencing its activities and raise the capital. Capital is the initial contribution which we need to carry our business activities, and it is the accounting term. Capital is the accounting term, initial contribution made by the owner to carry the business activity. We call it as capital. So when company invests the capital, so that capital they use for their purposes. So in companies, the amount initial contribution what they are investing, that is called as share capital. Share capital. So initial contribution to start the company activities. that is called as share capital. So that capital invested is divided into small unit. Capital is divided into small units, and each unit is a share. So again I repeat, accounting term capital, when we invest the amount to start a business, it may be any form of business organization, maybe sole trading business, partnership business or company business. Initially we invest some capital amount, that is called as the investment made by the proprietor to carry their business activity. So here it is called as capital. So that capital is divided into units. Each unit is nothing but a share. Now company issues shares to the general public. So public, they also need a share because of their investment purpose, thinking that some return will be given by the company in the form of dividend. And the public who are purchasing the shares of the company, they are called as shareholders of the company. So just we are taking the beginning process of company activities. So here when company issues shares to the general public, there we find the transactions. Again I repeat, you are finding two parties. One is the company, other is the general public. So company is issuing shares to the general public. So before they issue shares to the general public, they provide applications to the public. Application means just those who want to invest in the shares of the company, they need to fulfill the requirements of the company. For that purpose, company gives the application, and application is not free of cost. It is just like when we think of taking admission into a particular college, directly we cannot think of admission process. So there are certain procedures to be followed by the student. It is just like you come to the college and you take the application form along with the prospectus. So application form, when a student gets it from the college office, it is not free of cost. Some minimum charges they charge. Similarly, when you are thinking of purchasing the shares of the company, or when company thinks of issuing shares to the general public, application is to be fulfilled or filled by the particular investor or public. So minimum requirement, minimum charge they have to pay. For example, if we take A is there who wants to purchase or invest in the shares of ABC Company Limited, and he is going to get the application. So for example, company is charging 10 rupees or 20 rupees. So there comes the concept called as money. So again I go back to the transaction. So it is the dealing between the two parties, and we record only those transactions which are measured in terms of money. So paying application fee of 10 or 20 rupees, he gets the application, and all those details, whatever is there in the application, that is going to fill. Now, transaction takes place. Accounting cycle says that whenever there is business transaction, already we discussed it, whenever there is business transaction, that is to be recorded in the books of journal. So journal of companies, if I take ABC Company Limited, application money is 10 rupees. Application money is 10 rupees. Correct? So here, this is the transaction. So accounting cycle says that whenever there is business transaction, that is to be recorded in the books of journal. So here company receives the amount from the particular investor, and in return it gives the share application. So one transaction takes place. So that is to be recorded in the books of journal. So just I am connecting all the corporate or company's transactions with accounting. How that is to be accounted for, how the transactions are incurred by the company. So when you record this in the books of ABC Company Limited, so we think of journal entries. Now what is this journal and what is this journal entry? So journal, in simple we say that it is the day book or daily recording of the business transactions incurred by the companies. So daily recording of the transactions, because a company where you find a large amount of transactions or more amount of transactions, and every day we cannot remember all those transactions incurred by the company. For that purpose, all those things are to be recorded, particularly in the books of journal. So here we incurred one transaction, application money 10 rupees, that we are recording in the books of journal. So journal entry, how that is to be recorded? So to understand the concept of journal entry, we need to understand the transaction. So accounting, again I repeat, transaction is nothing but dealing between the two parties. Now who are the two parties here? One is the company and one is the particular investor. So when they exchange something which is happening in terms of money, so that is to be recorded. So journal entry means the two parties identifying the nature of the transaction, who are the two parties and what are the accounts that are taking place, that is to be recorded. Now what are the accounts that are taking place? How to identify that? So accounting entry or journal entry, you are finding two different parties, and to record this in the books of journal, we need to understand the basic of journal. So journal, it says that when we classify the transactions or the nature of the transactions, first comes the personal account, second comes the real account, third comes the nominal account. Because we cannot classify the accounts as per our requirement. If I say that ABC company issued 1000 shares of rupees 10 each, and application money is of rupees 10, some other processes done by the company. So my conveniency, or as per my conveniency, if I record the two different accounts, or if I identify the two different accounts, it is against the accounting principles, accounting rules and accounting regulations. For that purpose, some basic requirements or accounting rules and regulations which are to be followed when we record the transactions in the books of journal. So again, they say that three accounts we normally take. One is personal account, one is real account, one is nominal account. So keeping in mind personal account, real account and nominal account, we classify the accounts. That is something but summarizing. So accounting is nothing but recording, classifying, summarizing, finally interpreting the results. And we take all those transactions which are measured in terms of money. Now here, what is this personal account, what is this real account, what is this nominal account? So personal account, we say that name of the persons or name of the entities or any other party representing the entities, we take under the head personal account. Here ABC company is there. Suppose X is purchasing the shares of the company. X is called or X is falling under the category of personal account. Then name of the representatives who are representing the companies, they are falling under the category of personal account. So personal account, again we have a rule, that is debit the receiver, credit the giver. I repeat, debit the receiver, credit the giver. We debit the account wherever you are receiving the money, and we credit the account where you are giving money. So that is the rule of personal account. So second comes real account. So real account rule says that debit what comes in, credit what goes out. And all the assets I mean to say all the fixed assets, all the current assets, all the assets are falling under the category of real account. So debit what comes in, credit what goes out. So whatever comes to our company, that is to be debited, and whatever goes out from our company, that is to be credited. And finally, one more thing, one more account is nominal account. So nominal account rule says that debit all expenses and losses, credit all income and gains. Debit all expenses and losses, credit all income and gains. So whatever expenses incurred by the company, that is to be debited, and whatever income earned by the company or received by the company, that is to be credited. So whenever transaction takes place, it may be in sole trading business, partnership business, or company business. So we are discussing here company business. So whenever transaction takes place in the company, first we have to identify the nature of the transaction. So after understanding the nature of the transaction, nature I mean to say whether transaction is of cash, transaction is of credit, purchases, sales, or any other types of transaction. First we identify two different accounts which are there in the particular transaction. So here ABC company issued 1000 shares of rupees 100 or some other amount, for example, where application money is rupees 10. So how to pass journal entry for this? Here company is issuing shares to the public. It is charging application amount of rupees 10. When company charges application amount, company receives cash from them. So here we debit cash or bank account, debited to share application. So later in the detailed problem we discuss all those entries. Here just we are understanding the concept of corporate accounting. Transactions incurred by the companies and how that is to be recorded. So we are taking the example of application money, that is rupees 10. So when company charges application money of rupees 10, we take the application and in return we pay 10 rupees. So 1000 shares, 10 rupees, correct? So company receives cash. Now why this bank account? Cash means we receive the hard cash. Bank account, nowadays we can find maximum transactions are incurring in the form of bank transactions. So they are depositing amount in the bank account of the company. So for that purpose, either cash or bank account. Then for what purpose? To share application account. So from here we start all the transactions incurred by the companies. So let me come back to this corporate accounting. So just we recap all those things, whatever we discussed in these minutes. Accounting and corporate. So corporate in simple is nothing but companies, and we account for all the transactions incurred by the companies. So starting from recording the transactions of the companies, then classifying all those transactions, then summarizing all those transactions, and we have to remember the important concept here, that is the transactions which are of financial in nature. All the transactions which are measured in money or equivalent to money, only those transactions are to be recorded in the books of journal. We cannot take other transactions which are not measured in terms of money. Then summarizing, we give the summary of the transactions, that is the nature of the transactions, whether it is of cash transaction, whether it is of credit transaction, purchases transaction, sales transaction, or any other type of transaction. Then interpreting the results thereof. So we connected that with accounting cycle, starting from business transaction, then journal, ledger, trial balance, final accounts. So final accounts tells about interpreting the results. Interpreting the results means when company starts its business activities, there are many investors and there are many users of accounting data. It may be the internal users or external users. So they want to know the position of the company. So orally we cannot say that our company is the reputed company, or our company is earning this much of profit, our company's market value is good. So orally we cannot say all these things. So that is to be something written communication. For that purpose we have interpreting the results thereof. You prepare the financial statements. That's what. At the end we have final accounts. You prepare the financial statements in terms of, later we discuss trading account, profit and loss account, profit and loss appropriation account, and balance sheet. So when we prepare all these financial statements, so when finally we prepare the reports of the company, that is to be submitted to the users of accounting data, so they can study in detail all those processes of the companies and all those activities undertaken by the companies, their assets, liabilities, their market value, and whatever activities undertaken by the companies. So they can also take a decision whether to be invested in that company or not to be invested in that company, because investors and other parties, they have also the choice. We do not have only one company in the corporate sectors, we have n number of companies. So if they are not satisfied with the return of that company, company 1, they can think of some other companies. So with this, the introduction of corporate accounting, I conclude by saying that we account for all the transactions that are incurred in the companies. So in the next lecture, we take all those transactions incurred by the company along with practical problems and other concepts or contents which are there in corporate accounting. Thank you.